If you're a retiree earning rental income, you might be wondering how to best manage your tax obligations and protect your wealth. The good news is that with the right tax tips, you can minimize your tax burden and keep more of what you earn. In this video, I'm going to walk you through some of the best tax strategies that retirees with rental income can use to maximize their savings and reduce their tax exposure. Stay tuned, because towards the end, I'll share a key wealth protection strategy that could significantly benefit your long-term financial plan. Before we dive in, if you're serious about protecting your wealth in the next 2 weeks, I highly recommend clicking the first link in the description to get a free guide on why thousands of Americans are choosing gold IRAs to safeguard their savings. This is especially important for high net worth retirees. So if you have 100K or more in your IRA or 401k, or even 5M plus in savings, you won't want to miss out on this. Now, let's talk taxes. First off, rental income is generally taxed as ordinary income. This means it's subject to the same tax rates as your pension or Social Security benefits. However, there are key deductions you can use to lower that taxable income. For example, you can deduct the cost of property management fees, repairs, maintenance, and even depreciation. Depreciation is one of the most powerful tax-saving strategies for retirees with rental income. You're allowed to deduct the cost of the property's wear and tear over time, which can reduce your taxable rental income. This doesn't mean you're getting a check from the government, but it does reduce your tax liability. Over the long term, it can result in substantial savings, especially if you own multiple properties. Another strategy to consider is creating an LLC or another legal structure for your rental properties. While this might sound complex, it can actually offer you substantial tax benefits and liability protection. An LLC allows you to separate your personal and business assets, which not only shields you from potential lawsuits, but can also offer better tax treatment for certain expenses. You'll want to speak with a tax advisor to see if this is right for you, but it's definitely worth considering for retirees with significant rental income. Additionally, you should keep track of all your expenses related to the property, as these can reduce your taxable income. Things like property taxes, insurance premiums, and even travel expenses for property inspections can be deducted. If you're managing multiple properties, the costs can add up quickly, making it important to stay organized and keep detailed records. Here's something many retirees overlook: the impact of passive income. If you qualify as a real estate professional, according to the IRS guidelines, you may be able to deduct your rental property losses against other sources of income. This can be a game changer if you're trying to offset other taxable income in your retirement. But let's be honest here. While all these strategies are helpful, they don't guarantee wealth protection. If you're serious about securing your future and protecting your savings from economic uncertainty, a gold IRA could be your best option. If you're unsure about how it works, I encourage you to grab the free guide linked in the description to learn why so many American retirees are choosing gold IRAs for their wealth protection strategy. By moving some of your savings into gold, you can hedge against inflation and market volatility. Unlike rental income or other assets that can be heavily taxed, gold IRAs provide a more stable, tax-advantageous way to grow your wealth. And if you're looking to preserve your wealth over the long term, especially if you have significant savings, gold IRAs are worth looking into. To wrap things up, managing taxes on rental income doesn't have to be complicated, but it's important to take advantage of every deduction and strategy available to you. And if you want to protect your wealth for the long run, don't overlook the power of a gold IRA. It's a simple, effective way for retirees with 100K pluses in savings, or even 5M pluses in savings, to safeguard their wealth from economic uncertainty. Click the link below to access your free guide and start protecting your wealth today.